Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from MarketSite with Dave Weisberger. He is the co-founder and CEO of CoinRoutes. And we are going to focus on why crypto traders and the exchanges are missing the point. And of course, it all comes back to best execution. Dave, as always, great to have you back with me at MarketSite. And this is something that we have spoken to countless times in the past. These exchanges cannot fix these problems if they remain isolated.
Yep, that's right. And by the way, thank you for having me
as
usual. To me, it's fascinating. You have exchanges who have billboards throughout New York City, others who take out ads and talk very, very loudly in national media, and they all talk about how they're building a better digital asset world. But the fact is you can't have a digital asset ecosystem one exchange at a time,
right?
Because you have 7 or 8 of them. If their prices are different, if the one that thinks they're alone price is wildly different than everybody else's, their customers on one side of the transaction are losing. They're not getting best execution, and that can create very bad problems. And from the SEC's perspective, they look at this and say, well, the market's disorganized. I don't know that the CFTC is used to this sort of thing, but organization of markets is more of the kind of thing that we see in equities. It's gotten better in FX, et cetera. But regulators all around the world are used to this sort of idea of coordination because it makes some sense.
Right, but I mean, they might be used to this idea, but you can't just simply plug and play the cryptocurrency ecosystem into evolved capital markets like the equities. So what do crypto exchanges, what do they need to implement to at least get somewhat there?
Well, I mean, look, this is a very self-serving answer, right? So our company, CoinRoutes, we have consolidated data feeds, we have algorithmic trading across exchanges, we give people tools. If you're an exchange and you look at the data from all the other exchanges, you can create collars on your exchange, you could potentially use someone like us to route out, you could build your own routing to do that. It is different than in equities because you don't route out for infinitesimal differences because the fees in crypto are much larger than these differences. But net, there are occasions when you would want to. Plus, there are exchanges who are building their own algorithm suites or their own trading desks, OTC desks. And rather than building an OTC desk where you're taking often principal risk to trade, what you really should be doing if you're an exchange is basically looking at what you're good at. What you're good at is being a neutral party that brings buyers and sellers together, a pure agent. Well, today, in the world of electronic assets, all pure agents have a robust algorithmic agency capability. And without that, I don't really see how they can survive. It just doesn't make any sense. Building manual desks is not the real answer to go forward.
Well, how about investors? You wrote that they should vote with their feet.
Sure.
Let's talk about that. And then also there was a trade that you picked up on over the weekend.
Oh, God,
that kind of shows why this is an issue.
Yeah. So when I say vote with their feet, it's very simple. If you get a better experience trading on an exchange or trading through a platform, do it. Now, there are multiple things that exchanges offer in crypto. They do have custody. Some have insured against their deposits. Those are important features. Don't get me wrong. It's not purely execution. It's not just best price. But understanding where you're going matters. So this weekend was interesting because we had 2 interesting moves. Friday through Saturday, you saw a slow grinding rally, followed by a small sharp spike, followed by a little bit more of a grinding rally. And then Sunday morning, you saw a cataclysmic drop of 400 points like that. Now, the difference between the two was striking. During the rally, all the exchanges' pricing stayed together. There was never an arbitrageable opportunity. This is in Bitcoin, by the way. And so it was pretty obvious whoever was buying was doing it at least somewhat carefully. Either it was a sophisticated firm, like one of the big OTC firms, someone using software like ours, whatever, but it was keeping it more or less in line. And so you can get the idea that they were doing it, there was a method to what was going on. If it was 1 buyer, if it was 5 buyers, whatever, but it was at least organized. The drop on mid-Sunday morning, 2 things about this. Thing number 1 is the least liquid period of time during the week. If someone's going to go to sell a large amount of coins, to do it then is actually one of the dumbest possible things you can do. So the second thing is the drop was totally discoordinated, i.e. there was massive arbitrages opened up the entire way down. Exchanges, whichever one was the lower exchange was off from the others. Meant it was done sloppily. There's only 2 possibilities here. Possibility 1, the person who did it was a moron, right? Someone who absolutely has no idea how capital markets work and just panic sold in a way where they lost a lot of money for themselves. Possibility number 2, much more nefarious, is it was manipulation. Somebody had sold a bunch of futures slowly during the earlier period of time, had bought maybe some coin, and then turned around and sold that coin all in one swell boom to make money on the futures contract after they created the market. Now, I don't know which it was. I'm not sure. that there's any way to know. But I do know that in either case, were the markets more coordinated, it would have been better, and the exchanges involved would have been less complicit if it were the second case.
Where are we with the regulators? I mean, are they in the mindset now where they're serious enough to really understand how crypto best X works?
I don't know. I think that some are better than others. I think the US regulators are behind because, frankly, the SEC understands the basic stuff, but they don't really have jurisdiction on Bitcoin or Ethereum. And the CFTC has never really worried about some of these things before. I think overseas there are regulators who are really trying to get their arms around this. And I think that the owners of the assets and the investors in the assets are also trying to get their arms around this. But when things happen like this weekend, it kind of makes people concerned, right? It's like, was this a manipulation? Was something going on? Did a Bitcoin whale do something in the futures markets? And remember, when we think futures, we think CME and CBOE in the US and soon to be Nasdaq, but there's actually a ton of liquidity on non-regulated futures markets like BitMEX, for example. And that is for people outside the United States. So it's very hard. You can't use a US focus when you're talking about crypto because it's a global market. And so my hope is the regulators are starting to understand this. I mean, it's really more what needs to happen is the industry needs to get together, the SRO formation of some of these exchanges, but they all need to get the mindset that what they do impacts what their competitors doing and vice versa. Right. So I used this example once. I said in Silicon Valley, which is very much how crypto operates, there's this mentality, kind of like the old movie The Highlander, there can be only one. Exchanges want to be vertically integrated and own everything themselves. On Wall Street, or in the City of London, financial firms are used to saying, there are places we should cooperate on settlement systems, we should cooperate on how margining works, we should cooperate on documentation like ISDAs and stuff for derivatives. Many examples of cooperation. That needs to be embraced by the crypto community because that will allow more effective self-regulation and better best execution and all this other stuff moving forward.
How much time do they have, though? You don't want this to fizzle out at any point.
Well, actually, I think the clock is ticking.
Yeah.
There are new entrants coming into the market, like the RSXs of the world and the BACTs of the world, the San Juan Mercantile Exchanges of the world, CCX has just started up that have more traditional financial backing. You can bet that if the current incumbent exchanges don't realize what's going on, they could lose.
Yeah.
Quite literally lose to ones who figure out that working together is actually a better process.
All right, Dave. Thank you, as always, for catching up with us at MarketSite.
Thank you.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.